Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I do each and every week, I've left my lines on the chart from last week's report so you can see how the forecast is working out. And if you recall, I drew these horizontal lines noting the resistance above the market and how it's going to be difficult for the market to continue to go higher when we have these resistance levels more or less stacked on top of each other. However, last week I drew this line right here where I said we would drop down, test this support level, which was the gap fill support. See that horizontal line right there? And then I said we would most likely bounce. Well, we're in the process of bouncing, so I'm going to keep that in place just like that with my target on the diamonds at 352.03. I'm going to keep this gap fill target in place as well. I could clean up the chart just a little bit by removing some of these resistance lines up here because we don't need those unless the gap fill resistance is broken. But here's the big deal. You see this gap more or less lining up right with this 20 period moving average that's sloping down. That moving average is going to act as a resistance line as the price even stays below it. So in other words, although this is a resistance gap fill point, if next week we continue to stay below that 20 period moving average, this moving average is going to drift down and again act as a resistance. It's known as role reversal. I talk a lot about the role reversal on the charts, and so we have that in place. So I'm going to leave that just like that with my target above the market, like I said before, with the diamonds at 352.03. And with that, let's go to IWM, which is the small cap ETF in the Russell. Now, again, as I zoom in here, you can see, well, it's hard to see actually. I drew my lines in a downward direction here, with this being a support level, and then I said we would most likely bounce. That's exactly what's happened. Now that all of those targets have been hit, I'm going to clean up the chart and redraw what I see here. This is the support level that I've been talking about for months. That's the 210 level. And as I mentioned last week, our option traders know that that's a trigger point. So in other words, if the IWM closes below 210, we are exiting our positive delta or long positions on our spreads, and we're going full speed ahead into negative delta or bearish positions. Until then, we're working both positive and negative deltas, both bullish and bearish spreads and such. So that is something we're going to keep our eyes on. Now, again, as I zoom in just a little bit, we have a little bit of a shadow underneath that candle, but we have a higher high. We have a lower low, but we have a higher high. So that's a half signal. And if you look down here as I zoom in, that CCI is very, very close to a buy signal. So next week, I believe IWM is going to move up and test this gap fill resistance right here. Now, many of you know my long-term opinion of the market is extremely bearish. And I'll say it again, I'm looking at a possible crash in the market. And with that, we have to understand that there's a lot of investors that are now changing their outlook. Instead of being buy and hold, they're being more buy and protect. If you were watching the markets today on the close, we were down pretty big, about a half hour before the close, and then it looked to me like there was some short covering on the close, which rallied the markets up. That's, of course, a temporary condition where those who are short the market are buying back that position to close it, and it pushes prices up. If we get a bounce next week, we might see some new and fairly aggressive short selling at this resistance area, which could then result in downward prices from that gap fill target. So again, you have to be very mindful of risk management here. Any new long positions need to be protected. And in addition to that, if you have any profits at this point, you need to protect those profits. Otherwise, the market could smack you down and it could be painful. So be really careful about how you're approaching this market. It's getting very touchy. Now, with that said, I got my target there again for IWM. I'm keeping that right there in place with the possible move higher next week at 226.77. That's my target. We're talking about the middle of the month here, right around the 13th. All right, so if we get that move up to the gap and you start to see volume dropping, that's going to be a sign of a weakness at that resistance point. So again, that's IWM. If we take a look at the spiders, which is the S&P 500 ETF, again, we're hitting on all cylinders here. I said that we would move down, test this roll reversal support. Remember, that was a support level that was drawn from this previous resistance. Remember, previous resistance broken turns into new support. And again, we wound up almost exactly at my price target there of 456.66 on the spiders. And now it looks like we have another half signal. Again, what is that? That is a higher high, but we have a lower low than yesterday. Higher highs showing a possible pivot point forming here. And with that, we have the oscillators starting to turn up. The CCI is turning up. Ideally, I would like to see a drop in volume on a day like today, but we had so much action. But again, we have what I believe is a transition happening in the market where I do believe we're seeing the end of a bull market and the very beginning stages of a bear market. Again, I think we could see a slight rally next week in SPY with a resistance at that 20 period moving average. So again, my upside target now is going to be 463.54. And then again, keep an eye on volume because this could be a failure to get to the higher levels. And then we'll have new short selling coming in on SPY. Now that brings me to the VIX. Ticker symbol VIX. It's the CBOE Volatility Index. Again, as you can see here, I drew my lines in an upward direction, saying that we would most likely test this resistance up here at 31.5. That's exactly what happened. We went up to that resistance, showed this long shadow above the candle, which is normally bearish. Again, look at some of these long shadows back here and what's happened as a result of those long shadows. We generally see sell-offs after that long shadow shows up above on the candle for the VIX. Now, what's happening here also is that we have a mixed signal. We don't normally see it this way, but we also have a bullish engulfing. Now, how do you read that? Well, it's a little bit more complex, but you have to go with the price. You have to notice this long shadow above, which means the VIX was being sold off towards the end of the day. And you have these oscillators down here that are starting to pivot lower. You see that? This is very close to a sell signal on the VIX. So I'm going to go to the downside on the VIX now. I could erase that line now that the target is hit, but I'm telling you that this is going to hold most likely as resistance, and we're going to start to move down as this gap down here acts as a price magnet for the VIX. So again, keep your stops in place. Even though the VIX is bearish, that would mean more bullish condition for the S&P, but we talked about that already. If we get a rally in the S&P next week, you got to move your stops up, protect those profits, and of course, limit downside risk. But for the VIX next week, I think we'll pull back to 25.43. I'll keep that in place, and we'll see how that forecast works out next Friday. Now for the Qs, interestingly enough, we had the same thing happen. I said we would most likely move down and then start to pivot up. This is the only one that did not hit my target precisely to the penny. That target was 390, 391. I think we will see that next week. Again, mainly because the oscillators are extremely oversold and we have this long shadow. This is a bearish engulfing, but that long shadow tells me that the buyers are starting to move in. I'm not expecting great things to happen on the upside, but I do believe that we're going to see higher levels and a possible test of this resistance known as the 20-period moving average. Again, so I'm looking for a slight rally in the Qs and then a possible pullback from there. Now, for our option traders, congratulations, especially those who got into the put spread that we put on not too long ago. Along the 400 puts, we short the 385 puts. That's working out perfectly because in a spread like that, you want the market to go to your short strike, and that's happening as planned for our option trades. So again, congratulations, and I'm looking forward to more trade alerts out there in the future for you. Now, that's the Qs. Now, finally, I've been commenting on Ethereum, ticker symbol ETHE. Look at that. We hit the target again precisely. I said we would most likely move down to test this support. We hit that target on Ethereum at $40.40. However, I'm going to erase these lines now that the targets are hit. What we're seeing now is a shift in the oscillators, a little bit different than what we're seeing in the general markets. We could see Ethereum come all the way back down to test this role reversal support level. See, again, former resistance here was broken here, tested as support once. I think we're going to start moving down to test that support level once again. We have a cross in the CCI below the momentum line. That generally means 2 to 4 more days of downside activity, at which time I think we could see a little bit of a bounce down there at that role reversal support. So keep your powder dry for those of you that are in the crypto market. If you're not all in at this particular point, I would say keep some of that buying power available and possibly look at a bounce at this level. If you are all in long in Ethereum, this is a good place to be placing your sell stop below that role reversal support level, right? So that's for Ethereum. Well, that's all I have for this week. Have a great weekend, and we'll talk to you next week. So long.